Welcome to the JD Power AI and Insurance Podcast, where we explore the intersection of artificial intelligence, regulation, and customer experience in one of the world's most complex industries. I'm your host, Michael Vermillion. Today, we're diving into one of the most important and misunderstood topics in the world of AI, and that's regulation. Our guest today is Scott Kosnoff, partner at Faegre Drinker, a leading voice in helping insurers navigate the legal and regulatory challenges of emerging technologies. Scott is trusted by both industry leaders and regulators. He's briefed the National Association of Insurance Commissioners in closed-door sessions, advised on risk frameworks, and helped clients assess their algorithms for unintended bias. So, if you've ever wondered how to move forward with AI when the rule book is still being written, this is the episode for you. So, let's get started. Scott, welcome to the podcast.
Thanks, Mike. Very excited to be here.
So you bring a rare combination of regulatory insight, legal acumen, and practical guidance on AI. So can you tell us a bit about your work at Faegre Drinker?
Sure. So my AI-related work, which is frankly most of what I do now, breaks down into helping our clients stay up to speed on the evolving regulatory and legal expectations for their use of AI. And the more fun and challenging part is helping them then put together and implement a bespoke AI governance and risk management framework that will let them get the benefits of the new technology while also staying out of hot water.
Thanks, Scott. So you've worked closely with both industry leaders and regulators, including briefing the NAIC. So what's driving so much regulatory interest in AI right now?
I think a lot of it is that like a lot of its regulators are excited about the possibilities afforded by AI, and they're excited about the potential benefits that could be reaped both by the companies themselves and by consumers. But, they're understandably concerned about the downside risk as well. And as a result, they're concerned about accuracy and validity. They're concerned about unintended discrimination, which in the insurance context is called unfair discrimination. They're concerned about privacy issues. They're concerned about a lack of transparency or a lack of explainability. And in some use cases, they would be concerned about safety too. These concerns, of course, are not unique to insurance. It's the same set of concerns that come up over and over again, regardless of sector. And of course, are not even limited to the United States. These concerns are really global in nature, and they just keep coming up over and over again.
That's interesting. So what's your take on the current state of AI regulation and insurance? Are we at the beginning of a new chapter? Are we halfway in?
Probably halfway in. The NAIC adopted a model bulletin for insurers that are using AI systems, and it's now been adopted in 24 jurisdictions, which is, a fair number by NAIC standards, at least given the amount of time that's passed, the short amount of time that's passed since the NAIC did its thing. I expect that a handful of additional states may ultimately adopt the bulletin. We're not going to get to 50, but, it's still a good number. In addition to the NAIC bulletin, which is now in place in about half of the states, some of the states are going to do their own thing. So in Colorado, we have a related target. The insurance division out there is focused on not AI, but the use of ECDIS, which stands for External Consumer Information and Data Sources. They've got a governance framework that insurers are expected to employ. And then New York, which always goes its own way, came out with a circular letter last year, which in some ways, sort of the greatest hits of both the NAIC bulletin and the Colorado governance reg. They took components of both, stirred in some of their own stuff, and called it a day. So that's really what's going on in terms of the regulatory activity. The wild card at this point, I think, is the legislative branch and what the state legislatures across the country are doing. Because there are a lot of AI proposals that are making their way through the legislatures. It's too early to know how many, if any, are going to cross the goal line. But those sort of take a different approach than what the insurance regulators have taken.
Yeah, so Scott, just to kind of build on the state level regulation, is there a possibility that that kind of fragmentation of regulation is going to slow down AI innovation?
Yeah, it's a really good question. So Given the widespread adoption of the bulletin, I'm less concerned about conflicting, expectations across state lines, at least as far as expectations coming from the insurance regulators. Obviously, New York and Colorado are going to be their own animals, but otherwise, it's pretty much the NAIC bulletin, and it's been adopted with very few tweaks being made. In most states that adopted the bulletin, it's really been verbatim. But the legislative piece, I think, poses a real risk because the legislatures could go a very different direction and impose much more burdensome requirements on both developers and deployers of AI, and that's something I would keep an eye on.
Okay, so why don't we then turn a bit towards the topic of navigating uncertainty? So we're kind of in an uncertain environment. The regulatory landscape is evolving. So how should insurers be thinking about AI governance and risk management?
Yeah, I think you're exactly right. I think it's a fluid situation. I think the regulatory and the legal expectations are going to continue to evolve for quite some time, in part because the technology itself is going to keep evolving and the way we use it's going to keep evolving. And so, the rules might change as well. But here's the main message I give all of our clients. You got to have a good story to tell. And by that, I mean a credible story that demonstrates to regulators, to a judge in the worst case scenario, to the New York Times when they come calling, that says, hey, we appreciate the concerns that have been expressed about the use of AI. We're taking those concerns seriously, and we're acting with reasonable care to try to avoid negative outcomes. If you can put together that sort of good story to tell, then frankly, that's as well as you're going to be able to do right now, and you ought to have a parade. Now, it's easier said than done. There's a whole lot of work that has to go into having a good story to tell, but it's certainly doable, and I think that ought to be the North Star that guides our efforts.
I just want to double click on that. So what does a good AI risk management framework look like? Number one, and then how early in the AI lifecycle should it be implemented?
Yeah, so there are multiple components that go into building a credible story to tell. And, if you were looking for a cheat sheet, I'd look at the Colorado governance reg because it actually lays out a nice skeleton that a lot of our clients have chosen to start with. But, a lot of the companies that we work with have adopted high-level principles that are intended to sort of guide their governance efforts on a going forward basis. Everybody we work with forms a multidisciplinary, cross-functional governance committee as the group that both sets the policy but also implements it on a going forward basis. When I say sets the policy, of course, obviously this is all reportable up to senior management and the board as well. But you got a governance committee that's taken the lion's share of the work. There are written policies and procedures. There's a risk assessment rubric. There's a lot that goes into it. And sometimes I think there's so much that goes into it that can become almost paralyzing. You can almost get caught in the weeds and not know where to begin. And so I think it's helpful to take a step back and say, what are we trying to accomplish here? And here's what I think we're trying to accomplish, Mike. I think what we're trying to do through all the component parts of the risk management framework is to institutionalize critical thinking. And by that I mean, rather than just focusing on the upsides of a potential model that a vendor is selling you or building one internally, of course think about the upsides, but also think about what could go wrong. And by that I mean, what could go wrong with the AI system or its deployment, who would be harmed, how bad would it be, how likely is it to occur, and what, if anything, can we do to try to put guardrails around it to try to either prevent those bad outcomes or at least soften the impact if those outcomes were to occur. If you can institutionalize that sort of critical thinking and make it part of your corporate DNA, you're going to be fine. On the other hand, all the policies and procedures in the world aren't going to save you if you are unable to integrate that sort of thinking into your DNA.
So I think one aspect of the risk management framework are the algorithms themselves, right? And one of the things that we want to test for is unintended bias or discrimination. So how do you advise clients to assess their algorithms, especially when the rules are still evolving?
Yeah, really, really good question, and it's a tough area. So I think the starting point has to be that your AI governance committee needs to understand how bias can creep into the system, whether that's in the data used as a training set, whether that's the algorithm itself, whether that's the way that humans interpret and apply the output. It can come in any number of windows, and you got to be sensitive to what the potential sources of bias might be. The reason why we have a cross-functional multidisciplinary governance committee is because most of the issues that come up in the AI context are not neatly pigeonholed into purely legal or purely actuarial or purely data. And so what we're trying to do is have a collection of the right experiences and expertise sitting around the proverbial conference room table to try to both identify risk and then work their way around it. Because of the intense focus on the potential for bias and discrimination, I think it's really important that you have a diverse committee too. Because frankly, if everybody on your committee looks like I do, you're going to have blind spots. And I wish that weren't true, but I think it is. And the best way to avoid those blind spots is to have diverse membership on the committee. Now that's sort of the holistic approach. You asked specifically about testing, which is still very much sort of a new thing to be doing, at least in the insurance sphere. We ought to say at the outset, New York requires testing right now as part of their circular. Colorado eventually will require testing if and when they actually finalize and adopt their testing regulation. But other than that, in most states, it's not going to be required. It may be encouraged, but not be required. Still, I would say to most of our clients, it's worth thinking about doing testing even if it's not legally required. But you got to know going in, there are upsides and downsides to testing, and it's very much sort of a new experiment that we're working through. One of the challenges, I'll spit out two of the challenges. Challenge one is we don't yet have a consensus way to test for discrimination in this area. We got a lot of different theories, a lot of different ways to do it, but there's not like one single universally recognized way to test for discrimination in this area. And the second issue, which is a significant one, is we don't yet have a universally recognized, what I would call regulatory yardstick to hold up against the results of the test and be able to tell anybody you're in the green or you're in the yellow or now you're in the red zone. So it's tough going. I think there's a lot to be gained from testing, but it certainly has its challenges.
So in addition to that kind of cross-functional, diverse governance committee, is there anything else that kind of separates or makes stand out that the companies that are doing a really good job of managing AI risk well? Any other kind of tips from kind of the leaders of the pack?
Yeah, I think the companies that are doing the best job in terms of governance and risk management aren't viewing it as simply a check the box sort of exercise. They understand what we're trying to accomplish, which is to mitigate the organization's exposure to regulatory risk, litigation risk, and reputation risk. And they're doing their level best to engage in the sort of critical thinking that we've already talked about, and they're not looking to cut corners. This is not the sort of thing that you're going to be able to do, once, every quarter or once every 6 months. This is an ongoing process that requires active, creative engagement by a whole lot of folks in your organization.
So, Scott, looking ahead, where do we see AI regulation going? Is it getting stricter? Are we going to have clearer standards? I think that's one question. The other question would be, what can insurers do to kind of stay ahead of it?
Yeah, really, really tough question to answer right now, given the dynamics, the federal and state dynamics. So since President Trump took office, we've had really a sea change in the way the federal government is approaching AI. It's a very deregulatory approach to AI. It's mainly about facilitating and encouraging innovation and trying to maintain what the administration calls global supremacy with respect to AI. And frankly, they're not really looking to put any brakes on the innovation or do anything that might otherwise slow it down or stop it. And I think a number of the states recognize that deregulatory approach for what it is, and they're seeking to fill the void, or at least the perceived void, right? And so, whereas, a year or two ago, a lot of folks might have said what we really need from a consumer protection standpoint is a single federal law that we can apply across the nation. That's not going to happen, or at least that's not going to happen anytime soon. And so I think the risk now is that states are going to go their own way, and they may go their own way in inconsistent or conflicting ways, which then puts pressure on Congress to try to do something about these conflicts and possibly preempt these state laws, which is a really long way of saying, beats the heck out of me what's going to happen. You're going to have this push and pull between federal inaction and state sort of trying to get in there. I don't know what the end game is going to look like, but what that means for companies is you got to stay the course. You got to continue to have a good story to tell. You have to keep an eye on what's happening at the federal level and at the state level, and recognize that those changes, those developments may well impact your risk management framework. And if it does, you make the tweaks and you keep going. I think one of the brutal realities of all of this is that there's no obvious finish line in sight. And so it looks like a really good story to tell, or sounds like a really good story to tell today, may not sound so great a year from now or 2 years from now as the bar continues to go up and as the technology continues to evolve. So you got to keep evolving with it.
So Scott, we covered a lot of ground today. I think a lot of great advice for insurance executives and AI regulation. Is there anything that we didn't cover in terms of perhaps an additional piece of advice around AI governance?
Yeah, so just a few thoughts on that, Mike. First, whatever we're doing in the governance and the risk management framework, it ought to be proportionate to the potential harm that we're trying to avoid and its likelihood of occurring. We don't have infinite time, we don't have unlimited resources, and so we really ought to be focusing our efforts on the big ticket items, those that have the greatest likelihood of creating the greatest consumer harm, right? So risk-based. Second, whatever we put in place needs to cover the full extent of the AI lifecycle, from the brainstorming stage all the way through to deployment, implementation, and eventually to retirement, because bad things can happen every step of the way. This is a profoundly unpopular bit of advice, but there is no one-size-fits-all approach. What works for your company might not work so well for my company. At the end of the day, organizations have to come up with a framework that works for them, given the way they're organized and how their culture works and how their use cases are playing out and what their risk appetite is. Another unpopular piece of advice, but it's true, is that we're going to have to keep evolving, right? And we're going to have to update, or at a minimum, we're going to have to reevaluate the strength of our program pretty often, and we may need to adjust it to reflect changes in the legal and regulatory environment. Everybody's got to know going in, no compliance program is perfect, bad stuff's going to happen, but the whole goal here is to minimize the incidence of those bad things and hopefully catch them before they mushroom out of control. And then finally, remember at all times what our goal here is, which is to have a good story to tell, one that demonstrates we appreciate the concerns about AI, we're taking those concerns seriously, and we're acting with reasonable care to try to avoid negative outcomes. If you can put all of that, into a single one-page document and go to bed every night with it and memorize it, you'll be fine.
Scott, thanks so much. That was terrific.
Thanks for having me.
So that was a fascinating and timely conversation with Scott Kosnoff, an expert who's not just watching the regulatory future unfold, but helping to shape it. So as we heard, AI regulation isn't just coming, it's already here in some places, and the pace is accelerating. So whether you're leading a carrier, developing models, or setting strategy, now is the time to think seriously about AI governance, risk management, and transparency. If you found today's conversation helpful, be sure to follow or subscribe to the JD Power AI and Insurance podcast wherever you listen. And don't forget to share this episode with colleagues. It's one that legal, compliance, and business teams all need to hear. Thanks for joining us. I'm Michael Vermillion, and we'll see you next time.